attractive rates. Real estate offers great investment opportunities whilst protecting and improving quality of life and remains an effective way to build wealth. It typically yields above equities and bonds and usually provides investors with a stable income stream. If you think about it, tenants have a legal obligation to pay rent versus dividends, which are discretionary. Furthermore, bonds can default, whereas new tenants can always be found to lease or purchase a new asset. Despite the uncertainty and upheaval that the world has been experiencing over the past few years, from COVID-19 to disrupted supply chains, the war in Ukraine, inflation, rising interest rates, a spike in the price of the commodities essential to the real estate industry, such as steel and lumber, labor shortages, and a potential fuel shortage in commodity-producing economies. The graph you see on screen now depicts the fact of how real estate as an asset class has continued to perform. Ups and downs they are, but the regression to the mean shows a distinct, steady upward trajectory. On the local scene, our real estate industry has remained robust throughout the pandemic, and in fact, been one of the main growth drivers in our economy. According to an article in the Sunday papers a few weeks ago, last year alone, the Kingston and St. Municipal Corporation approved building permits for just under 600 residential projects alone, totaling around 450,000 square meters. This equates to 4.8 million square feet of new construction at an average of 8,000 square feet per development. The fact that we have a growing number of successful entities, including major financial institutions, involved in or entering into the real estate development space is testament to the health of Jamaica's real estate market. Our own assessment of the various segments of the Jamaican market are that we are constructively bullish on the industrial segment. We are bullish on hospitality, especially the luxury segment, and this is globally. Neutral on residential, though low income and the luxury subsectors are performing well, as you can see from the housing demand numbers. And those numbers are from the NHT. And we are constructively bullish on the commercial segment, where we ourselves have a major investment, which we will touch on shortly. Now to value creation. The question is, how do you create value in real estate? Well, we'd like to highlight a few ways in which you can. First, it is important to realize that the main strategy surrounding creating value in real estate is the concept of buy, fix, and sell. Clearly, you want to buy low, fix, and sell high. And the fix, of course, being in parentheses, the essence is what constitutes the fixing component. Fixing can mean design and develop, refurbish, repurpose, upgrade, and the list goes on. Please note that fixing can also simply mean maintaining an asset's income in a period of uncertainty, such as we are arguably experiencing now in some sectors. Here are some specific ways which you can create value. First, getting ahead of major trends before the market has recognized these trends to be the new normal. This may sound simple, but to illustrate this concept, I'd like to use one of the world's greatest ice hockey players of all time, Wayne Gretzky. Wayne was once asked about the secret of his success that made him stand out from all other ice hockey players on the rink. His answer was simple. The other players always skate towards the puck. I, on the other hand, skate to where I think or calculate the puck is going to end up, which makes me appear to be a step ahead of the field. That is exactly one way you can create value in real estate. figure out where the puck is going to end up, and skate towards that. And we have a perfect example coming up in the case study. Second way of creating value in real estate is through joint ventures. Simply put, joint ventures allow you the chance to create a pipeline of value that is unavailable to the rest of the market. Of course, this comes along with all of the other advantages that JVs present, such as shared risk, shared resources, additional credibility, as well as access to additional experience, expertise, and knowledge. The third way of creating value is by investing against instead of with the herd. This simply means unlocking the locked by going against the herd to find pockets of value. Again, the case study will show how we've used this to our advantage. Another way of adding value is by conceptualizing how innovation can provide opportunities for future generations and the life of buildings and assets. This equates to the correct perception and recognition of opportunities, and in some instances, even doing what others say cannot be done or are unwilling to do. Fifth, problem solving. A major reason why many real estate assets remain locked, with a large portion being attributable to a lack of access to capital. Just as Jason would have alluded to, and prior, the Minister of Finance, it's a problem-solving approach, particularly with respect to creative structuring of real estate investments, which will go a long way to improving returns by removing hurdles and accessing a property's true value. Sixth and final is that we're highlighting today, change the use of a property so that the new use has greater value than the cost of the change. Put another way, value adds occur when the marginal dollar invested in the property produces more than $1 of value. And this can reposition the property for immediate increases in market value or additional rental income. Now to de-risking. Here are a few key considerations in de-risking a real estate development or project. First, the governance must be bespoke and appropriate, with clearly defined roles, authority, limits, decision-making processes, and policies clear to all. The bespoke governance plan, of necessity, needs to be appropriate to the circumstances. The plan needs to be developed in collaboration with all stakeholders, endorsed at the highest level, and implemented at the commencement of the project. Most importantly, there should be no situation where the governance plan is set aside. Second is risk management, where there must be an established risk register with an early and honest assessment of all of the potential risks, so that the risk register is there from the beginning and is reviewed and revised regularly so that difficult, complex, and high-risk elements are not addressed too late in the project. Additionally, it is essential that the risks sit with the party best able to manage it. Third, investments should be fundamental or based on fundamentals and not speculation. It's very easy to fall in love with a property and your own vision of what you can make of it. Unfortunately, as I'm sure we all agree, emotion is not the best investment advisor, because this can lead to aggressive assumptions and potentially bad outcomes. Of course, the ability to finance a deal doesn't make a bad deal into a good one. Fourth, design economically, or put another way, understanding the implications of design. It's easy to hire an architect to design a beautiful structure, but should art lead the project or should the economics? It is important to understand that a design incorporating unconventional elements will not just cost more, but will also take more time to deliver. While innovative and cutting-edge engineering can inspire admiration, it is also hard to design and makes it more challenging to find craftsmen and contractors to construct it properly. In high-value engineering projects, such as the aeronautical industry, particular emphasis is placed on considering whole life cycle because investments are so high and it's difficult to recover projects where the wrong decisions have been made up front. Fifth, ensuring realism. One of the main reasons for a blowout in project time frames is because time allowed for the build element has been compressed. It is rarely possible to complete the construction phase more quickly than it was initially planned. Avoid unrealistic projections, manage expectations, and allow resources and costs to be planned with accuracy. 6 is inadequate cash flow, which will grind you to a halt without it being carefully planned and without a pursuit cost budget. You need to appropriately add values and include any and all exclusions and price in risk. If the costs aren't properly understood, this can lead to misinformation, sometimes making it look like the project has gone over budget when in fact it was not the case. It wasn't properly budgeted in the first instance. This, of course, may mean front-loading some costs to get the riskier subjects addressed first, which, of course, may make a project look front-loaded with expense, but it is to manage risk. Communication and good stakeholder management. The final consideration in de-risking real estate projects is maintaining the quality and consistency of stakeholder management and project communications. A communication plan should be developed early on and maintained for the duration of the project to build momentum and interest around the project, as well as to ensure messages provided to leadership, contractors, key stakeholders, and the wider community are regular and unambiguous. Good internal and external communication also informs the market from the development stage of the project, contributing to project awareness and interest. In addition, good informal communication between the members of the broader team will lead to early identification and rectification of project issues as they arise. I also like to use this chart to explain the importance of stakeholder management in real estate and construction in Jamaica. So on screen, it's what I call a power interest matrix. On the left-hand side, the y-axis is the power, and I describe power as who has the power to stop your real estate project. The bottom left is high, top left is low. On the x-axis on the bottom of the screen is interest, and it really is who has interest in your project. So, in other words, where does your project sit on their priority list? And clearly, the dangerous quadrant here is the person who has the power to stop your project, but it is at the bottom of their priority list. Notice the bottom left quadrant, which is the red quadrant, is the most full. Every single one of those players in that box can stop your project. Individually, not collectively, individually. So that could be Parish Council, NEPA, Fire Brigade, NWA, the list goes on. And the idea is, it just gives you a sense about stakeholder management, about due diligence, about understanding the complexities of real estate, because there is a very, very large grouping of regulatory entities, for the most part, who all can individually stop your project, and your project is nowhere. They have 50 other projects that they're looking after, so it's nowhere near the top of their priority list. So that, I think, top left, you notice it's pretty much empty. Clearly, most developers are in the bottom right-hand quadrant, but the dangerous quadrant is in red. Finally, people. Establishing a strong team of experienced professionals to lead projects is fundamental. Simply put, select and match the team with the level of project risk, strategies, and strategies also require people with the correct operational experience. So before we go on to the case study, let me outline briefly a little bit about SYGNUS Real Estate Finance. SYGNUS Real Estate Finance, or SRF in short, which falls under our Alternative Investment Solutions platform, has as its mandate the provision of flexible capital to unlock the value of real estate across the region, whilst delivering risk-adjusted returns for our investors and shareholders. What do we mean by flexible capital? Simply put, SYGNUS Real Estate Finance takes a careful look at every real estate opportunity and we deploy either equity or debt appropriately structured to bring a project to life, which in many instances would not measure up to the traditional loan conditions required by a commercial bank. Some of the flexible capital instruments we use include mezzanine financing, debt financing, asset swaps, profit-sharing notes, and preference shares, to name a few. And we deploy this capital at the value creation stage of the real estate life cycle. So on to the story of One Belmont. Picture this. That was William. We are in the middle of a pandemic with most of the global workforce working from home. Indeed, many are questioning whether or not we have seen the end of the commercial office as we knew it, with work from home potentially becoming the new normal. Through a joint venture partnership, we conceptualize, design, and commence construction of an 80,000 square foot Class A office medium-rise building, no retail space, with abundant parking on 4 levels, including the basement. Do you recognize some of the value creation and de-risking buzzwords that we just alluded to? Joint venture, because this was an opportunity not available to the rest of the market. Investing against the herd, and note, of course, I had a picture of the current state of the building, but I'm sure most of you have driven past on Belmont Road and would have seen the building under construction and the crane in place. The construction is far advanced. The project is currently on budget and on schedule, a testament to SRF not just talking about value creation and de-risking, but actually doing it. Some of the other buzzwords you can see there is the creation of long-term investor value, design economically. To give you a good sense of value creation here, we knew that parking was an issue at most commercial buildings across Kingston. You go to most places, you can't find somewhere to park. So we were deliberate in ensuring that this building exceeded the required amount of parking from the regulatory authorities. So we have 4 parking levels. So you will never go to this building to conduct business and not be able to park your car, because that was something that we were adamant from the very first day in the design of the building. And as of today, 4 of the 5 floors are leased. So taking the leap to invest against the herd, skating to where we calculated the puck was going to be, is what produced One Belmont. And the testament of the strength of the strategy is the fact that 4 of the 5 floors are already leased. And the 5th floor, we have multiple entities that have shown interest in leasing the 5th and final floor. So value creation, the SRF way. So what are some of the investment opportunities that are available for potential investors? Clearly, there's the purchase of SRF shares, which, similar to Jason pointed out, are currently undervalued. So there's a significant opportunity there for persons who may be interested in purchasing shares of SRF, which are listed on the Jamaica Stock Exchange, both in USD and JMD. Of course, SRF is buttressed by, just as SCI, a robust pipeline of commercial, hospitality, industrial and residential projects. Second, there are off-take opportunities in a major commercial project, which I just highlighted, via the purchase of the fully leased floors. Third, we have a major industrial park project in the planning stages at Lake Spen on 55 acres, which represents an opportunity for equity investors for lease of warehouses and ultimately for the purchase of leased warehouses. Finally, we have equity, preference share and debt opportunity in a major luxury hospitality project, as well as the purchase of income-earning villas. And for details of any of the above, we're happy to have discussions on the margin. So here's a look at the 4 members of the SYGNUS real estate team. And the entire team is here today, so we certainly will be available to have discussions on the margins for anybody who needs more information on SYGNUS real estate. I'd like to leave you with, before we have questions, one very short video clip which highlights the Miami Bay project, which we are about to launch. Okay.
Ladies and gentlemen, please, a round of applause. I particularly loved your presentation. It was just so clean and so succinct and very easy to understand. We had mentioned earlier, especially for those of you who might be joining us right now, or maybe you didn't hear it earlier, the role of SYGNUS and the different pillars. You had the private credit, and then we're speaking about real estate, and then later on we'll hear about private equity. We have a question for you. With the and by the way, I think my biggest takeaway from you was when you said emotion isn't the best investment advisor, especially with everyone being so, passionate about what's going on in the building industry. Certainly. I think what you really did was show us that emotion is never, ever the best investment advisor. Question, with the shift of work culture to include more remote working, how do you see this impacting the commercial real estate segment? So you spoke about one of the fundamentals, which was betting against the herd, investing against the herd. But with this reality of remote work, how do we look at that and the impact on the commercial space?
So that's an excellent question, and it's one that we have spent considerable time to research the answer. At the start of the pandemic, there was a trend that the world felt work from home was going to be the new normal. But increasingly, as time went on, companies found that innovation was not as productive as it could. Certainly, tech companies, a number of entities found that when you're in your basement, in your pajamas, in front of a Zoom screen, you miss those moments of collaboration in the workspace, around the coffee machine, during the lunchtime, when collaboration, problem solving, and innovation works best. So a lot of companies found that they began to lose the edge. The corporate culture was also suffering. So not long after, we all began to see the trend of a lot of the major corporations around the world inviting their staff to come back to the office. It started in London, Canary Wharf, in New York, Wall Street. The trend began to grow. Let's get people back to the office, because the company saw a noticeable decline in the culture, in productivity, in innovation. And that was one of the elements that we use to understand investment in One Belmont. There are also some other functions that you can't do over a Teams meeting or a Zoom meeting. You need to, when you're doing deals of 100, 200, 300 million US dollars, you need to meet people face to face, shake hands, look in each other's eyes, and not through a screen. So, and the third element I'd like to highlight is that there are some functions that can be done, certain back office functions that may be more suited to work from home, that you're not necessarily client facing, but in the client facing space, We believe that there will continue to be a need for commercial real estate, as well as the multinationals, the embassies, the large corporates and so on. They will always need a physical space to transact their business. So our research was quite detailed, wasn't just in Jamaica, it was globally, but we were absolutely convinced, and we have proven so by the lease take-up of our One Belmont project, that the research was accurate, and we are convinced that the office is here to stay. But yes, there is a hybrid nature of the future workspace, where some functions can be done and continue to be done from home, but there will always be a space and a need for office space, including classy office space such as One Belmont.
Thank you so very much. I like when decisions are driven by data, don't we all? It's, please applaud. Absolutely, absolutely. Going back to what he said earlier about just emotion, it's interesting that what he said, Malcolm Gladwell, who happens to be one of my favorite authors, just got a lot of backlash, and he got a lot of flack for saying something similar, where he said, the pajamas, people, staying behind a screen is not productive, and it actually damages the culture. And really and truly, the data has absolutely shown that. So it isn't to discredit the fact that there are remote jobs and that, of course, persons can work from home in their pajamas, but saying in this kind of climate, we definitely need to look at the data and make decisions based on that data. I have a question here for you. By the way, any questions in the room? Any questions in the room? I know his presentation was very good. Where are the pockets of opportunities that SRF will be looking to do further investment? So we saw Belmont, you mentioned Miami Bay, we saw the industrial park. Are there any other areas for opportunities where real estate is concerned?
Sure, there are. Another excellent question. And we approach this by segment. It's not a one-size-fits-all for investments for us. What works in the residential sector may not work in hospitality, may not work in commercial or in industrial. I gave a sense of our outlook on each segment in the presentation in terms of where we were bullish, where we were neutral. What I'll say is SYGNUS is looking at opportunities, not just in SYGNUS Real Estate Finance, not just in Jamaica, but also on just as SCI in the wider Caribbean sphere. We have a number of opportunities in the pipeline that we are looking at. Hospitality is one area that clearly the Caribbean is the fastest growing recovery destination post the pandemic. The leisure market is recovering nicely, and the luxury sector in particular, there is actually a shortage of luxury product available on a global stage. So we are particularly bullish on that space. So hospitality is one area we see investment opportunity on the horizon, and continue to see it, because that is not just something that would be relevant for Jamaica, but for other Caribbean territories as well. The residential, clearly, there are different segments within the residential market. The low-income market, we know there is a significant demand. We saw the numbers from NHT, almost 280,000 houses are in demand in the low-income sector. The challenge, that market operates differently from the middle and the upper end of the residential market. They all have different characteristics. So clearly, we would carefully decide which of those market spaces we would find the opportunities. The commercial segment, as we spoke about already, clearly having just done 80,000 square foot successfully, we have other opportunities based on our investment properties that you will see on our balance sheet. So we do have some prime properties, including the French embassy or the former French embassy that we purchased, and other properties are around Kingston. So we have many future pipeline opportunities to create more value in the space. And on the industrial scene as well, clearly we have an investment property that we're looking at to do out in the Lakesman areas, where we have 55 acres on our balance sheet, right opposite Wisinko on the Lakesman Road, and that's another significant opportunity for us. And the idea is we are constantly keeping our pipeline robust, because ultimately, we're a publicly traded company, and we're doing it for our shareholders. So.
Thank you so very much. Ladies, I have a question. I have two. Okay, I will take these two questions. If I could get a mic to the second row. We also have a question in the third. You can stand. Tell me where you're from. Right over here. Thank you so very much. It's a hot topic, Mr. Cummings.
Thank you. My name is Yashi Hall. I'm with SYGNUS. David, I wanted to ask you specifically about the material complexity in terms of the prices post-pandemic, even pre-pandemic. How do you manage the volatility in those prices across your segments and the logistical issues that come with that?
Thank you.
That is another excellent question, and it's a part of our de-risking strategy. So during the pandemic, and not just the pandemic, also induced by the war in Ukraine, there have been significant disruptions to the global supply chain. That resulted in certain commodities, steel, lumber, cement and so on, beginning to climb to levels that were, quite frankly, unsustainable for the construction industry. The way we at SYGNUS approach that is number one, forward purchasing is one option, which we have done for multiple projects. So in the case of one Belmont, we forward purchased 800 tons of steel to lock in the price at a certain value. So clearly it means cash out the door earlier than you had projected in your cash flow, but the benefit you get is that you have locked in the price at a certain value. So you avoid the fluctuations of the increasing steel prices and lock in a certain value that you had in your financial model. So that is one strategy that we employ, is through forward purchasing. The other thing that we can do to mitigate against the supply chain disruptions is what we create a long lead time list. And that list essentially is a compendium of those commodities that will take a long time to arrive. For example, right now, transformers there's a global shortage of transformers. If you need a transformer today, it'll probably take you 18 months to get one. There are certain things that would normally take 3 months, they're taking 9 months and 12 months. So the way you mitigate that in construction, or the way you de-risk that, is you are buying things a lot earlier than you normally would. So if it's an 18-month project and you need a transformer that takes 18 months, day one of the project, you have to order that transformer. So your cash flow profile may seem distorted because you're putting cash out the door earlier in order to mitigate against that particular risk. So we employ particular strategies to mitigate that, whether it is through advanced purchases to lock in the price, to avoid the fluctuation, or through a compendium of long lead time items that feeds back into the project schedule to order things a lot sooner than you would normally order them. We don't know when it may go back to normal. We don't know if this will be the new normal, but the idea is that it clearly a long lead time item compendium is going to be an essential component of any project plan from day one.
Fantastic question, great answer. Question.
Morning, Maya Walrand. I'm with Jamaica Producers. One of the sort of sub-segments you haven't really touched on, and I would love kind of your view as to the opportunity, is really in the sub-segment of the retail space. It is, from a trend perspective, something that just before the pandemic, there was a fair amount of investment across Jamaica in this space, particularly with sort of smaller footprint retail, not as much on the large scale. You take the example of PriceSmart that took 10 years to find a new space in Portmore. Curious to hear your thoughts on where the retail space is going, particularly with global trends around e-commerce and those sorts of things, really disrupting the space in markets like the US, but where is it going in Jamaica?
Thank you. Great question.
Sure. Thanks, Maya. So the retail, as I said, just a sub-segment, something that we are still assessing. When we were looking at the industrial, for example, although during the pandemic there was exponential growth in the demand for industrial warehousing space, we soon got to a plateau, and we saw recently where Amazon themselves are trying to offload, I think, up to 10 million square feet of warehousing because everybody was pretty much, let's say, Amazoned out. And we are going into a period of uncertainty, so all of the household spending has been curtailed. And what that translated to, and I'm speaking on the US market here to come back to Jamaica, is that a lot of the big box stores in the US suddenly found that they had excess inventory. And when those stores have excess inventory, they then have to lower prices to get rid of the inventory and so on. So there is still a lot of fluidity in that space that we are still assessing. So as of today, I couldn't say that we are bullish or neutral or negative on that particular space because we are still assessing it. It also feeds into our potential warehouse project because that's an area where there's opportunity there for us to include some of that in that particular project, but we have made no decision on that space as yet. I'll tell you though, back to the One Belmont project, which I think is a classic case, we looked at the floor plate. For those of you who've driven past it, it's quite a substantial building. The floor plate is 16,000 square feet. There was a thought for us to do retail on a plate, but back to the value creation I spoke about in terms of if we divided that 16,000 square foot floor plate, you then have to create corridors and common areas, which means you lose saleable area. So our strategy for that building was deliberately target at individual entities that would take an entire floor. And that way, from an economic perspective, the moment you step out the elevator, that entire space becomes leased to one entity. So you don't lose any square footage in saleable area or in income. So, and I probably haven't answered the question in the way you'd like, because the fact is we are still assessing the retail space or that particular subsegment of the market. And if we see the opportunity for us to enter into it, we have the capacity because we have the inventory, as in the land bank on our balance sheet, and clearly we have the capacity to take advantage of the opportunity should it present itself.
Thank you, and I'm sure I can speak on behalf of Maya. I think it's much better to have a speaker answer honestly, openly and with transparency that, there isn't necessarily a decision right now because we're still in the process of analyzing and assessing. Ladies and gentlemen, please put your hands together for David Cummings.
Ready. Well, go on. You this next year, Good morning, ladies and gentlemen. I'd like to call this annual general meeting for SYGNUS Real Estate Finance Limited to order. My name is Gregory Samuels, and I'm the head of investment banking at the SYGNUS Group. And it's my honor to welcome you all. But before I officially call the chairman, Mr. Horace Masado, to officially bring this meeting to order, you would have seen the news that the Honorable Peter Rousseau passed away last week. He is a very invaluable member, or he was an invaluable member of our Real Estate Advisory Committee. So I'd like you all to stand and just observe a moment of silence for the late Peter Rousseau. May his soul rest in eternal peace. At this time, I'd like to call Mr. Horace Masada, our chairman. Horace.
Thank you, Greg. Good morning. Good morning, ladies and gentlemen. I hope we're all in good stead, well fed, well rested, and here to participate in a really wonderful meeting. I'd like to officially welcome you to this first annual general meeting of the SYGNUS Real Estate Finance Limited. My name is Horace Masado, and as Greg indicated, I am the chairman of the company. I'll preside over the majority of the proceedings this morning. However, I'll be handing over the chair for a brief while to Director Johnson, who will preside over item 5, the re-election of directors of the agenda. That's item 2, who will preside over the re-election of 5 directors who are retiring this year and who are all eligible for re-election. Being eligible for re-election, each of these directors have indicated that they are interested in continuing to serve on the board. Myself included in that 5 are retiring, and so Director Johnson will preside over that aspect of the meeting. I'm advised by the company secretary that in accordance with the company's articles of association, a quorum is present by proxy and in person. The meeting is therefore properly constituted, and I now declare this annual general meeting open. I'd now like to ask Director Ike Johnson to address item 2 of the agenda of the meeting.
Thank you, Horace, and good morning, ladies and gentlemen. I am Dr. Ike Johnson, and I'm a director of SYGNUS Real Estate Finance. I wish again to welcome you to our first annual general meeting. I have been asked to conduct a particular item on the agenda, resolution number 2, the election of directors. In accordance with Article 124 of the company's Articles of Association, at the first annual general meeting of the company, all directors except for the managing director, if appointed, or the directors appointed by the holder of the special chair shall retire. During today's annual general meeting, 5 directors will retire. The directors retiring under this article are Mrs. Horace Masado, Linval Freeman, Pierre Williams, David Cummings, and Miss Elizabeth Steer. As per the company's articles, all retiring directors are eligible for re-election. The directors have expressed their interest in being re-elected. With your permission, therefore, I would like to bring this resolution forward and ask that the election of the directors be conducted before the other items on the agenda. Before we move to adopt the resolution, I will take some time to give a brief overview of the voting process. In regards to casting a vote in person attendance, shareholders in physical attendance will vote by a show of hands. Once we get to the business section of the AGM and the voting on the resolutions, I will read each resolution and thereafter table for adoption. 2, shareholders will be asked to vote for the resolution via a show of hands. Shareholders who are for the resolution will raise their hands, followed by shareholders who are against the resolution. The scrutineer present will take account of the number of hands raised for and against the resolution, and this total will be added to the shareholders who voted virtually and via proxy. If a voter abstains, their vote will not be included in the count. If casting a vote during your virtual attendance, which means shareholders attending virtually will vote using the e-platform provided. During each resolution, you should wait for your options to pop up on screen or click Vote Now on your screen. Once resolution is on screen, select the For or Against option. Then select Submit Vote at the bottom of the screen. You will be asked to confirm your vote. Select yes to confirm your vote or select no if you want to change your vote. My colleague, Mr. Andrew Foreman, will act as scrutineer and will confirm the vote by show of hands as well as the total votes for each resolution. Thereafter, voting will close and I will announce the results. One thing to note, shareholders and attendees' microphones will be muted for the duration of this meeting. In regard to proxies, the company secretary has advised that a number of valid proxies have been received in relation to the resolutions to be tabled today. In relation to the proxies where the chairman has been appointed to vote, he will vote all directed proxies in accordance with the directions provided. Where undirected proxies have been given, the chair of the meeting will vote the undirected proxies in favor of all resolutions. For the remaining proxies, the proxy must attend the meeting in person or virtually to present the member. Those proxies will be deemed valid once the registrar has confirmed the attendance of the appointed proxy holder. Proxy holders may also vote online once the registrar has confirmed the identity of the proxy holder and is notified that they are attending online, then they will be allowed to vote. With that said, I now move for the adoption of the following resolutions. To note, each resolution will be voted on separately. For the shareholders attending virtually, I would now ask you to submit your vote on this resolution on the e-platform. For the shareholders attending physically, you will vote by a show of hands, and Mr. Andrew Foreman will oversee this segment. At the end of the voting, all votes will be tallied to determine the results. We will announce the overall results at the end of the resolutions. I move now to propose the following resolution. Resolution 2.1, that Mr. Linval Freeman, who retires in accordance with Article 124 of the Company's Articles of Association, and who, being eligible, offers himself for re-election as a director of the company, be re-elected a director of the company. And just a reminder for the members online to cast your vote.
Shareholders present in person, could I ask you to, those in favor of the resolution, to so indicate by show of hands? Thank you. And those against? Thank you. resolution is carried.
So the resolution 2-1 has been carried. I now move to resolution 2-2 that Mr. Pierre Williams, who retires in accordance with Article 124 of the company's Articles of Association, and who, being eligible, offers himself for election as a director of the company, be re-elected a director of the company. Shareholders in presence, can I have a show of hands? And shareholders attending virtually, please remember to place your votes now.
Raise your hands. In favor? And those against? The resolution is carried.
Thank you, Mr. Foreman. Resolution 2-2 has been carried. I now move to resolution 2-3 that Ms. Elizabeth Steer, who retires in accordance with Article 124 of the company's Articles of Association, and who, being eligible, offers herself for election as a director of the company, be re-elected a director of the company. Shareholders who want to vote in favor, please raise your hand. Shareholders online, please be reminded to cast your votes online.
resolution is carried.
Thank you, Mr. Foreman. So resolution 2.3 has been carried. I now move to resolution 2.4 that Mr. Horace Masado, who retires in accordance with Article 124 of the company's Articles of Association and who, being eligible, offers himself for election as a director of the company, be re-elected a director of the company. Can I have a show of hands for shareholders who are in favor of resolution 2.4?
You can lower your hand. The resolution is carried.
Thank you, Mr. Foreman. Resolution 2.4 has been carried. I now move to resolution 2.5 that Mr. David Cummings, who retires in accordance with Article 124 of the company's Articles of Association and who, being eligible, offers himself for election as a director of the company, be re-elected as a director of the company. May I have a show of hands for shareholders who are in favor of resolution 2.5?
Thank you. You can lower your hands. The resolution is carried.
Thank you, Mr. Foreman. So resolution 2.1 to 5 have all been carried and all the retired directors have been re-elected as directors of the company. I therefore declare all resolutions carried. I will now hand over the meeting to our duly elected chair, Mr. Horace Masado.
Thank you, Director Johnson. And thank you, shareholders, for the confidence you place in the board and for returning us all 5 retiring directors as directors going forward. As directors, we take this vote of confidence very seriously, and we are firmly committed to representing the interest of shareholders and other stakeholders and promoting the business of the company. I'd like to take a moment to acknowledge and thank all our shareholders for attending today's meeting. Your presence today demonstrates your commitment to our company, and we appreciate your interest and support. This meeting is a hybrid meeting. That means we have some persons sitting in the room in person, and we have some persons who are participating online. The AGM is an opportunity for shareholders to hear from and put questions to the board, the investment manager, and our external auditor. The meeting is convened in St. Lucia, and we have a satellite location here in Kingston, Jamaica, from which the proceedings of the AGM are being carried to you live. Shareholders will be able to view the proceedings of the AGM, vote on resolutions, and submit their comments and questions in person or by logging on to the e-platform. The instructions to access the e-platform were provided in a shareholders' advisory released to the Jamaica Stock Exchange and on the Jamaica Stock Exchange website and on various social media platforms. Registration for access to the AGM was also circulated to all shareholders and is open and will remain open for the duration of the meeting, and persons will be free to register and be admitted at any time during the meeting. The notice of the AGM, the annual general meeting, and the form of proxy were dispatched to all shareholders on record in accordance with the company's Articles of Association. If there are no objections, I propose that the notice of meeting be taken as read. I'll ask you to indulge me for a moment as I give a very brief overview of the company. SRF, SYGNUS Real Estate Finance Limited, is an international business company incorporated under the International Business Companies Act 1999 of St. Lucia, with its registered office located at 20 McCoud Street, Castries, St. Lucia. SRF is an alternative investment company whose business is focused on the specialty real estate segment of the market. The company is dedicated to unlocking value in real estate assets across the Caribbean by deploying flexible capital through debt, equity, and other types of investment structures. The company's shares were listed on the main market of the Jamaica Stock Exchange on October 5th, 2021. By virtue of the shares being listed on the main market of the JSE, the company is subject to all laws applicable to issuers of securities in Jamaica and companies listed on the Jamaica Stock Exchange. I'd now like to take a moment to introduce to you the directors of the company. In addition to myself, there are 5 other directors of the company with us this morning. Let me introduce the directors who are on the podium, and then I'll introduce the directors who are joining us virtually. So, to my immediate left is Director Elizabeth Steer, and she's sitting right here with us in Jamaica. To her left is Director Pierre Williams. And Director Williams, as you can see, is sitting right here also. To his left is Director David Cummings. Director David Cummings is also the Vice President and Head of Real Estate and Project Finance at SYGNUS Capital Limited, the investment manager of SRF. Joining us virtually, we have Director Ike Johnson, and you met him earlier. He presided over a portion of the meeting earlier. He is also the Senior Vice President and Chief Operating Officer for SYGNUS Capital Limited, the investment manager of SRF. Joining us also virtually is Director Linville Freeman, who was projected on screen earlier. And Mr. Freeman is the chairman of the Audit and Governance Committee. Joining us also from St. Lucia is Mr. Rory McNamara, and he represents Corporate Secretary MSCI Inc. And they're sitting, as I said, in St. Lucia, and they're our corporate secretary. Along with Mr. McNamara, Ms. Valerie Rapier is a representative of the company secretary, MSCI Inc., sitting also in St. Lucia. The directors who are joining us virtually, along with those in person here, will fully participate in the meeting and will answer any question that may be posed to them by your audience. Also in attendance are members of the Investment Managers Executive and Senior Management Committee. Sitting on the podium with us, we have Mr. Beresford Gray. And Mr. Gray is the CEO of SYGNUS Capital Limited. And to his left, at the end of the seating arrangement here, is Mr. Jason Morris. Mr. Morris? Good. He is the Chief Investment Officer of SYGNUS Capital Limited. As indicated before, SYGNUS Capital Limited is the investment manager of SRF. Other executives present include Ms. Cyrilyn Hodson, Chief Legal and Compliance Officer, and she's very busy, but you'll see her milling around the room here. Also, we have Mr. Gregory Samuels, and Mr. Samuels opened the meeting, and he will come back to moderate a couple of sections of this meeting in a little while. Mr. Samuels is the Senior Vice President and Head of Investment Banking at SYGNUS Capital. Also, we have Mrs. Elizabeth James, and she's standing in the back there, and she's the Head of Wealth. We have Mrs. Monique Anthony, and I think Monique is joining us virtually. I'm so sorry. Monique is right here with us. I was looking around for her. She's right here in the room with us. Great. We also have Mrs. Yashi Hall, and she's a VP and Head of Risk. And I think, Yashi? Okay, I'm not seeing her, so she's actually joining us virtually. And then we have Mr. Andrew Foreman. Mr. Foreman is our scrutineer, and he's the legal counsel of the company. And we have several other team members. When we put on any event, including one like this, you need quite an army of people to assist us in getting it done right. And so the SYGNUS team pulls together to get what needs to be done when we're required to do so. So we thank you all. Okay, I would like to acknowledge the presence of a couple of persons who will be participating in today's meeting in one way or another, or assisting us. From KPMG, we have Mr. Damian Reed. He's with us in the audience today. He's a director at KPMG. We also have representatives from our registrar and transfer agent, the Jamaica Central Securities Depository. And representing the JCSD, we have Ms. Tiffany Hall and Mrs. Chantel Scarlett Dennis. Several members of the press and non-shareholders are also present with us. During the AGM, I'll refer to SYGNUS Real Estate Finance Limited as the company, or SRF from time to time, as I've done before. And so I just wanted to say that so that when I say the company, you know I'm referring to SYGNUS Real Estate Finance Limited. You have been provided with a copy of the agenda which sets forth today's proceedings. I've been advised by the Corporate Secretary that there are no apologies for absence. This being the first annual general meeting of the company, there wouldn't be any minutes to be tabled here this morning, so there are no minutes. I just wanted to say that. To get into the formal aspect of the meeting, I'll go over a bit of the purpose and then go through some procedural observations that we would need to abide by as we go through the meeting, okay? The purpose of the meeting is to seek the approval of shareholders of the company for the respective resolutions as outlined in the notice. The first item of ordinary business is the adoption of the audited financial statements for the year ended August 31, 2022. The second item is the election of directors. Director Johnson presided over that matter earlier, and that matter has been concluded. The third item is the director's remuneration. The fourth item is the fourth item is the appointment of the auditors KPMG and the setting of their remuneration. The fifth item is a special resolution for the company to serve notices and other documents by electronic means, and that will be the last item on the agenda. The resolutions duly set out in the notice of the annual general meeting dated the 10th day of March 2023, which was duly signed by the company secretary, was circulated previously. Before moving into the formal aspect of the AGM, there are a number of procedural matters, as I said before, that I want to just bring to our attention. One second. Okay. So with regard to voting, Director Johnson went over that earlier, and we have had, I'd say a good practice run. We elected 5 directors so far, so we're now pretty much experts at voting. In terms of permitting questions and answers, there will be 2 segments where shareholders would be allowed to pose questions to the company. The first segment will be prior to the adoption of the resolution for the audited financial statements. The investment manager will make a presentation on the company's performance and on the outlook of the company. At the end of that presentation, we will have the first question and answer section. We will allot 15 minutes to this segment to address your questions. As indicated before, Mr. Gregory Samuels will moderate that segment of the meeting. Following the votes on the remaining resolutions, there will be a second question and answer segment where shareholders can ask questions relating to the company's business. We have also allotted 15 minutes in this segment to address your questions. For the shareholders attending physically, if you wish to raise a question, you should indicate by a show of hands, just raise your hand, and one of our hosts will provide you with a microphone where you will state your name and your status as a shareholder for the minutes. For the shareholders attending virtually, if you wish to ask a question, you should select the Q&A button, the option located on the top of your screen, then enter your question into the text box provided and select the send button located to the right of the text box. The question will be read aloud by one of our hosts so that the other shareholders can hear the question. Shareholders are asked to limit their questions to 2 per person to give others an opportunity to pose questions and ensure that the AGM agenda can be completed on a timely basis. Questions and comments from the floor should pertain to the specific matter being addressed at that point in time. With this background, we will now move to the formal business of the AGM as set forth in the notice of the meeting and the agenda. In order to conduct an orderly meeting and give all shareholders an opportunity to participate, we will follow the agenda as outlined. I will now present the formal business of the meeting. We will take the remaining resolutions in the order as outlined in the notice. So, resolution number 1, and that's relating to the audited financial statements. So, in accordance with Article 195 of the company's amended and restated Articles of Association, the company is obliged to lay before the meeting the audited financial statements, together with the reports of the directors and auditors, which are contained in the company's annual report for the year ended August 31, 2022. The audited accounts were circulated and are before the meeting for discussion. Before inviting the discussion on those reports, I will invite our external auditors, KPMG, and the Chief Investment Officer of SYGNUS Capital Limited, the investment manager for SRF, Mr. Jason Morris, to make presentations on the auditor's report and the company's performance and outlook, respectively. Our auditors, KPMG, as I indicated before, is represented by Mr. Damian Reed, and I will invite him to come now to the podium and to share with us the auditor's opinion regarding the financial statements for the year ended August 31, 2022. Mr. Reed.
Morning, everyone. Thanks, Chairman. So, as some of you may be aware, given that SYGNUS Real Estate Finance Limited is an entity that is registered and incorporated in St. Lucia, you're not required, unlike the Jamaica Companies Act, to read the full the audit report on the financial statements. However, what I'll be doing is reading our opinion and key items from our audit report. Thank you. Independent Auditor's Report to the members of SYGNUS Real Estate Finance Limited. Opinion. We have audited the financial statements of SYGNUS Real Estate Finance Limited, the company, comprising the separate financial statements of the company and the consolidated financial statements of the company and its subsidiary, the group, as set out on pages 48 to 106, which comprises the group's and company's statement of financial position as at August 31st, 2022, the group's and company's statement of profit or loss and other comprehensive income, changes in equity and cash flows for the year then ended, and notes to the financial statements, including summary of significant accounting policies. In our opinion, the accompanying financial statements presents fairly, in all material respects, the financial position of the group and the company as at the 31st of August 2022, and the group's and company's financial performance and the group's and company's cash flows for the year then ended in accordance with International Financial Reporting Standards, IFRSs. I'll now turn to our key audit matter. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our opinion, in our audit of the financial statements of the year. These matters were addressed in the context of our audit of the financial statements as a whole and informing our opinion thereon. We do not provide a separate opinion on these matters. Key audit matter and how the matter was addressed in the audit. Valuation of investment properties. See notes 2D, I3, and 10 of the consolidated financial statements. This is a key audit matter because the group has significant interest in investment properties, which are measured at fair value. The fair values of these properties are appraised by an independent property valuator hired by management using the market comparable approach or the income approach. Under the market approach, comparable approach, a fair value is estimated based on the principle of substitution under which a potential buyer will not pay more than it will cost to buy a comparable substitute property. Methods or factors applied by management experts are dependent on the availability and use of reliable comparable sales data. The income approach is a valuation technique where the estimated or actual future cash benefits or income stream is calculated based on the length of the lease and discounted to present value. The estimate of fair value is therefore dependent on the availability of appropriate compare properties, discount, and the capitalization rate. These approaches involve an element of subjectivity which could result in a material error. Our audit approach in response to this matter include, amongst others, the following. We assess we engage with management to assess the design and implementation of the group's control over the determination of fair value. We evaluated the competence, independence, and experience of management's independent appraiser with reference to their qualification and industry experience. With the support of our own valuation specialists, we assess the methodology and assumptions applied in determining fair value of investment properties. For each property, we determine a range of prices and compare these to the value determined by management experts. In order to derive our range, one, for fair value determined using the income approach, we assess the appropriateness of the valuation model using our own experience with properties of these types, making our own assessment of the range of discount and capitalization rate by reference to external sources to the extent available, and perform our own fair value calculation to obtain the range. Two, for fair value determined using the market approach, comparable approach, we determine a number of comparable properties by reference to factors including zoning, physical characteristics, and environmental factors to derive our range. We assessed the disclosure of investment properties and fair value thereof against the requirement of IAS 40 investment properties and IFRS 13 fair value measurement. I'll now flip to page 47. We communicated with those charged with governance regarding, amongst other matters, the planned scope and the timing of our audit and significant audit findings, including any significant deficiencies in internal control that we identify during our audit. The audit engagement partner of the audit resulting in this audit opinion is Baldwin Alcandor, KPMG, Chartered Accountant, St. Lucia, November 30, 2022. Thank you. Chair.
Thank you, Mr. Reid. I'll now invite Mr. Jason Morris, the investment manager, to come and make a presentation to you on the performance of the company and on the outlook of the company.
Good morning, everyone. All protocols being observed. Good morning, everyone in the room and online. I have a few slides that I wish to present to give some insight into SYGNUS Real Estate Finance Limited. A few of the slides are a bit busy, so bear with me. I'll walk you through them. So the first thing I would like to do is just to reflect on SRF's journey thus far. Just to note that the company is only 3 years old. Started on August 1st, 2019, as you can see on the screen. With a small amount of money, 2.1 billion Jamaican dollars. We then proceeded to make our first set of investments right before COVID came, 3 investments over $500 million in February 2020. And for the financial year ended August 2020, so that would be the first fully financial year, which is actually 13 months, would have deployed over $2.5 billion. Move forward to the mid-year, February 2021, and we would have done a significant transaction, in particular, which was to acquire a very large piece of investment property and sold effectively half of it. That was done strategically. Then we began what you call our unlocking of value in real estate assets. So if you look at the chart on the screen, right, you have the timeline down at the bottom, but below that you have the burgundy/red arrow. And what that is showing you is that SRF is operating among multiple stages. So the first stage, what we have to do, take the capital, go out and look for quality assets to deploy the capital into, acquire them, because you don't want to be sitting and waiting to acquire assets, like for example in this period now, when the prices would have gone way up. So the first job that we had was to go and identify the best assets that were available and acquire as much of them as our capital would suffice. So that period obviously is still ongoing, but pretty much for the first year and a half, that's what we were effectively doing. So in July 2021, what that period then triggered was the process to start, executing on some of the assets that we would have acquired. And the first one would have been an industrial facility on Spanish Town Road, which we label as Spanish Penwood, which is actually the IMCA headquarters, and we'll give you more update on that later. Fast forward to the second financial year end, would have deployed an additional 2.6 billion Jamaican dollars. Then in September, hot on the heels of the end of the financial year, would have started what is now our flagship project at the moment, which is the One Belmont Commercial Office Tower, the first of its kind in the environs of New Kingston, 9 stories, and David and the real estate team, and Ike did a tremendous job in conceptualizing this idea and actually pushing to get to where it is today, and it's almost done. Next thing, very important, was we were still a private company, obviously, and then we decided that we needed to raise additional capital to continue the push forward to unlock value in real estate assets. And so we had an IPO that was listed on the Jamaica Stock Exchange in October 2021, and that was raised an amount of 2.3 billion Jamaican dollars. The IPO price was $19.30 for the regular market, and there were discounts all the way down to about $17.10 or thereabouts. So as you can see by the chart that I'm showing you, when we did the private placement when the company started, the book value per share then was $13.40. So that's what we sold the shares for. And then we proceeded to sell shares at $19.30, the highest price in the IPO. That means we would have created value for those investors who came with us very, very early, right? And then as you fast forward to the end of the financial year, which is what we are now discussing, financial year ended August 2022, you see that the book value per share is $23.24, which means that we have actually created an unlocked value at every stage of the way for those who came with us very early and for those who obviously came in the IPO. Now, the big elephant in the room is, well, the stock price isn't reflecting $23.24. Again, I want to say that SRF is only I guess now it's 3.5 years old. We have just begun our investment journey. We are just completing our very first life cycle. So if you look at the bottom of the chart, where the first phase was to do those acquisitions and deployment of capital investment. Second phase is to start the process to execute on those strategic assets that we would have acquired. And then the third phase is to start harvesting or exiting those first set of investments that would have been made during the period, say, July 2021 to now. So would have started that post the end of this financial year, and I'll give some additional insight in that. So from our point of view, wherever the stock price is trading, if it's not trading pretty close to book value or above, the shares are massively undervalued. That's my personal opinion. Of course, sometimes it takes a while for shareholders to understand what a company is actually doing, what its strategy is, and over time, these things will unfold. But as I said, a 3.5-year company, I think SRF will continue to unlock value for shareholders. Now, the last thing on that previous slide was that SRF remained profitable for 3 consecutive years. So we have been in existence for 3 years, and we have also been a profitable company. So this slide is effectively just giving you, again, a backdrop to what SRF has been doing. So in the first financial year, which is 13 months, the year ended August 2020, net profit that SRF generated was $366.3 million. Of course, because SRF would have become public almost 2 years after it came into existence, some of this might not have been known generally to the public. In the second year of existence, which it was still a private company at that time, SRF would have generated 1.81 billion Jamaican dollars in net profit, and I'll go through what drove that in a little bit. And in the third year, which is the year that we are now reviewing, financial year ended August 2022, SRF would have generated a net profit of 693 million Jamaican dollars. So overall, what does this mean? When we say we're unlocking value for shareholders, the proof of the pudding is in the taste. So the return on equity for all of those 3 financial years in terms of net profit, the average return on equity over that period is 29.6%, which, for all intents and purposes, that is really excellent performance for a company that's just 3 years old and is still gritting its teeth in terms of, unlocking and unlocking value in real estate. More than almost 3/4 of SRF's assets are still investment properties, and our job is to unlock the value from those investment properties. So if, today we have a balance sheet of 14.1, investments of 14.1 billion, and nearly 3/4 of that is still undeveloped, raw, pure land, then clearly, the future for SRF should be bright. Now, I want to give a few comments on the financial highlights for the financial year ended August 2022. Let me set this up by going through 4 main key achievements, because it's not just only about the numbers, there's the method to the madness in terms of what is driving the numbers. So, during the IPO, we said to shareholders we had 2 main jobs over the next 18 to 30 months, and that would be job number 1, number 2, and number 3 was to execute on our main strategic assets that we have on our balance sheet. And at that time, we identified 2 projects, or 2 assets that we wanted to unlock value in. One of them was 1231 Belmont, and the second one was Spanish Penwood. And I'm happy to say that as at the financial year end report, we would have effectively had 4 of the 5 floors of 1 Belmont, or 80%, with effectively leased out with 10-year leases that are renewable in hard currency or equivalent in hard currency. And that is the fact that the building is still not yet completed, although we are in the final stages of completion. To get that type of building is a $3.7 billion project. To get 4 of the floors already secured with tenants is simply phenomenal. The 5th floor, of course, will wait until the building is finished and in its shining glory with all the, the bright lights, etc., to optimize the lease roll on that. The second thing was to execute on Spanish Penwood, an important project, IMCA headquarters. We have already achieved practical completion during the 3rd quarter of the fiscal year for SRF. And that project, we expect to exit it in another maybe 30 days or less. And we'll provide an additional update on that throughout the presentation. Third important thing I want to highlight is that when we started SRF, we deliberately set out to focus on Jamaica first. SRF is a Caribbean investment company. But in the prospectus and in all our in the first annual report documentation, you would see we are giving detailed information as to why we chose to concentrate SRF's investment assets in Jamaica. It's very simple. When we look at Jamaica, where it's coming from and where it's going, it's a no-brainer, right? I mean, the debt trajectory of Jamaica is going to be the best country in the Caribbean from a fiscal and macro perspective, maybe in under 5 years. If we get our debt ratio down to 60%, according to what Jamaica is on track to do currently, we are going to be number one. So with that in mind, and looking right across the Caribbean region and what the price per square foot for all type of properties are, we pretty much know that Jamaican real estate is on fire and is going to remain on fire. You might have, ups and downs, but the trend is up. So we have deployed 11.2 billion Jamaican dollars in Jamaican real estate in only 3 years of operations, which is phenomenal for a 3-year company. And the fourth point is that value creation, obviously, while we are executing on those strategic projects and deploying capital, a couple of the other things that we were doing during the financial year is that we did 2 strategic acquisitions. We acquired 26 Seaview Avenue, which is in the middle of the Golden Belt, so to speak. We also made a deposit on 58 Lady Musgrave Road, which is adjacent to 56 Lady Musgrave Road, which we already owned. And post the end of the financial year, would have closed on that asset, which means that we now own 56 and 58 Lady Musgrave Road adjacent to each other. And if you know Lady Musgrave Road and the developments that are going to happen along that corridor, then you know why that's a strategic, those are 2 strategic assets to own side by side. Would have also entered into a joint venture called Monad Roy, which is also within the vicinity of the Golden Triangle, so to speak, and this is our residential project that we're going to embark upon, and you will see and hear a lot more about that in short order. That's going to be an exciting project. And of course, the crown jewel, so to speak, in SRF's Kiapa, Mami Bay, during the financial year, we continue to unlock value and enhance the value of that asset. And when we have announcements to make on that, at some later stage, we will do so. Now, with regards to performance highlight on the financial statements, SRF would have generated 1.35 billion in total investment income, which is down from 2.36 billion in the previous year. However, this was due to one item. Effectively, in the previous financial year, SRF would have had a one-off exceptional item where it generated 1.31 billion on an acquisition that it made. For a very, very valuable piece of industrial asset. So if you were to adjust for that one-off exceptional gain, then actually we would have had a 27.6% increase in total investment income. Net investment income, which you take out total operating expenses out of that, you get 983.6 million versus 1.76 billion in the previous year. Again, it's going to be impacted by that one-off exceptional gain from the previous year. Net profit 693 million, down from 1.81 billion in the previous year, and the same story goes here again in terms of the exceptional item from the previous year. So in short, basically SRF made too much money in 2021 because the first year it made 366 million and it went and earned 1.8 billion, and so it suffered by having reporting financials that are showing numbers that are less. But you get the picture that the trajectory is up. Shareholders' equity would have increased to 7.59 billion versus 4.71 billion in the previous year. And this obviously would have been driven by a combination of 2 things. One would be the IPO capital that would have been raised at the start of the financial year, as well as the net profits, retained earnings that would have been generated during the financial year. And finally, book value per share ended the period at $23.24 versus $23.77 in the previous year. Of course, when you look at book value, we would have issued shares in the IPO at a 20% discount to the then book value that preceded the financial year. So the fact that book value has held up pretty well is testament to the fact that the company made a decent amount of profit. And of course, the ROE, again, 29.6% average over the 3-year period. I just want to highlight a little thing on this slide. I'm not going to bore you with financial details. You already have the annual report. But just want to highlight in terms of what we mean when we say we are unlocking value in real estate. If you look at this slide, there are 3 arrows on it. So you would see that in 2021, you see the 1.31 billion in gain and acquisition of subsidiary, and there's there's zero in the current financial year, as explained before. I'm not sure what's going on there. Okay. And then the second thing is that you see share of gain on joint ventures, 546 million versus pretty much 30 million the previous year. Again, this is how SRF's financial statements operate. So the joint venture, which represents primarily the One Belmont development, you pretty much don't get that valuation into the financial statements until the end of the financial year. We do valuations once per year, and that is at the end of the financial year when we are being audited. We don't do valuations at a higher frequency. And so SRF's financial statements, or interim financial statements, will typically be very lumpy, where you will have quarters when you are seeing losses, etc., because the operating expenses are still ongoing, but the value from what we are doing isn't going to be reflected until you completely exit an asset or until the end of the financial year when you do the valuation. And that's because of the nature of SRF's business model, where we are in the business of trying to make gains from real estate, not just lease income. And then the third thing was that there was in 2021, operating expenses would have been pretty high because there was for a good reason, because the company made exceptional profits, which would have generated 377.9 million in performance fee. Of course, those performance fees didn't recur at that level in the current financial year. Moving quickly now, so one of the things that you must always watch with SRF is how efficiently we are operating the company. And there are 2 metrics that should guide you on this. The first one is called efficiency ratio, which is total operating expenses as a percentage of total investment income. And total investment income is basically the core revenues that SRF generates, right? So we benchmark ourselves against international best practice, and the threshold level that we chose for SRF is 45%, which is, pretty decent by any standard. And if you were to look at any financing firm right across the Caribbean region or worldwide, if they have 45% efficiency ratio, they are doing exceptionally well. As you can see, SRF has generated an efficiency ratio. So the lower the efficiency ratio, the better, right? And we have remained well within that efficiency ratio since inception. The second measure that we look at is same total operating expenses divided by the core assets under management. And again, the threshold that we have set there is 3.5%. Now, from time to time, if you make exceptional profits and those exceptional profits generated exceptional expenses, then you're gonna jump the rate, you're gonna exceed the ratio, which is what happened in the 2021 financial year. But outside of that, for the current financial year, we are well within the threshold target level. So, quick summary and investment activity. So the real estate investment assets of the company, 13.14 billion, ended the year up from 8.69 billion in the previous year. Investment properties, 9.46 billion versus 7 billion. Again, the majority of the portfolio, about 71.9% or thereabouts. Real estate investment notes, and these are basically customized debt instruments that we create to finance third-party development. So let's say somebody has a very nice development that they are doing. They don't have all the capital to finance the project. We look at it and structure a real estate a note that pays us a coupon and may or may not have some upside in terms of a profit share. So we have 2.4 billion invested in real estate notes, investment notes, and over the first 3 years, real estate investment notes has been a primary driver of interest income, because when we do a development like One Belmont or Spanish Penwood, we're not going to get any income from that until you finish the project and exit it, which everybody know that's how real estate operates, right? Of course, as we go through time and the business model morphs, meaning, let's say we complete One Belmont, and because our average investment time horizon is 3 to 5 years, and we decide that, hey, even though we have completed One Belmont in 2.5 years, let's say, we're going to hold 2 floors or whatever until year 4 or year 5, then that will also bring lease income to complement the real estate investment income. So you'll see that evolving over time. Joint ventures, 1.2 billion, which represents Mona Roy and One Belmont. And then deployment, we would have deployed 3.39 billion during the financial year, up from 2.61 billion the previous year. Of course, we had 463 million in cash on the balance sheet, which is what we call dry powder. Dry powder is just capital available to invest in new projects, but that does not include over $1 billion that we would have had from undrawn credit lines from commercial banks for use in project finance development. Now, just quickly on the 6-month financial statements, which of course would have been published on the JST. Again, setting the background of key achievements, would have had a 45% growth in the real estate assets or the portfolio of SRF, would have achieved 82% completion of the One Belmont project. We are currently in a harvesting period. We're harvesting more than $1 billion from multiple investments that are nearing completion or have already completed. So we are basically completing our first investment life cycle, as I would have showed you on the first chart. And then, of course, I spoke about the 56 and 58 Lady Musgrave Road, which was actually achieved in this quarter. So the 6-month financial highlights is that total investment income 9.4 million versus 30.6 million in the previous year, and that's because we have started the process of exiting these real estate investment notes, which is primarily the income driver during the interim financial statements before you actually do revaluation at the end of the financial year. Net investment income would have been negative 206.5 million versus negative 147.2 million for the previous 6-month period, and this would primarily have been driven by a jump in interest expense occasioned by the fact that we took on debt to do some of the acquisition that we spoke about and get to the finish line with some of our projects until we actually exit those projects, get those cash, pay off those debts, and then rinse and repeat. Similarly, net profit would have been driven by the outcome from net investment income because the operating expenses continue, but you're not seeing the revaluation gains. Shareholders' equity was 7.29 billion versus 6.77 billion in the previous year, and book value per share $22.32 versus $20.74 in the previous period. And very quickly on the investment activity, not a huge amount of change. The investment assets went up to 14.06 billion. Investment properties now 10.67 billion. Real estate investment notes now down to 2.18 billion. Joint ventures 1.2 billion, and would have deployed 2.03 billion in the 6-month period versus 1 billion in the previous year. And of course, on the balance sheet, we had 645 million in cash, and this does not include about, I think, 600 million plus in undrawn bank facilities to fund construction projects. I won't go through this too much, except to say that this gives you the listing of all the strategic assets that's on SRF balance sheet. The one item I want to highlight is the fact that you can see that SRF is well diversified across industrial assets, hospitality assets, commercial assets, and we do have a few splattering of residentials as well. So real estate investment notes, which are third-party projects, that's mainly how we actually get exposure to the residential market at the moment. And I'm going to fly through these, not going to spend a lot of time. Spanish Penwood, this is a 32.5 thousand square foot industrial built-to-suit facility. And the highlight here is that effectively we expect this to be, well, this is almost completed, and we expect the tenant to take occupation of the building very, very shortly, and for us to exit maybe within 30 to 45 days thereabouts. So you can drive past on Spanish Town Road and see the building. One Belmont likewise, you can drive past on Belmont Road and see it. The only thing I'll say about this is that we're currently north of 84% completion. And as I said before, it's pretty much tenanted out. Miami Bay, the lush green area on the chart represents, going all the way up to the main road, represents our 14 acres. So we continue to unlock value in this with our international partners, consortium that we're working with. And when we have something to announce, we will announce that. Lake Spen, this is 55 acres of industrial land. And we continue to work with our partners to figure out the best way to unlock the value. We're advancing along that strategy. And once we have something to announce to shareholders, we will. Former French embassy on Hillcrest, it's currently tenanted, earning some lease income, but that's not the strategy for the asset. Again, we are figuring out how to unlock the value in this. And once we have something to announce, we will do so. And then this is 56 and 58, which I spoke about already. And again, we are already started the process to unlock value from this. And once we have something to announce, we will do so. So I think that brings us to last thing, which is the strategic update. And very simply, we said we needed to execute our key strategic projects within 18 to 30 months. We are on target because One Belmont and Spanish Penwood, which were the two projects identified, are going to finish before the timeline. We continue to obviously work on the other strategic assets that we have on the balance sheet. So that's a work in progress. Of course, we have begun. We'll obviously be redeploying capital once we exit some of the projects that we are in. So we are completing our first investment life cycle, which will bring cash flow in. And when we get that cash flow, obviously one of the first tasks that we're going to do is consider paying a dividend sometime in 2023. So that's it. Thank you very much.
Thank you, Mr. Morris. We'll now invite Mr. Gregory Samuels to moderate over the question and answer section.
Thank you, Mr. Chairman. And can I give Jason a round of applause for that wonderful presentation? I mean, what stood out for me is that in August 2019, we started with 2.1 billion in capital, right, Jason? And that was predominantly equity that we raised from an IPO. And today, we have grown the business to 14.1 billion. And of that, 7.6 billion represents shareholders' equity. So we started with 2.1 shareholders' equity. We are now at 7.6. So we are living up to our mantra and our mandate to unlock value and create increasing value for our shareholders. And of course, in our very first year, we're profitable. And I don't know if you get the concept of the life cycle of real estate. It takes on average 18 to 30 months to conceptualize and develop a project. And then you need another 6 to 12 months to sell the assets So we are at that point, and nonetheless, we have still managed to return profit year upon year, even though these projects weren't harvested. Now, any question in the room? Any question online?
We will start with the questions in the room and then we'll do online. So we have a roving microphone. I know Mr. Blue said he had some questions. Are you ready, Mr. Blue? We have, I think I can do it on the we can go with Mr. Blue. All right, sir. You have any questions? All right. Anybody have any questions in the audience? All right. No, then we go online. We have about 5 questions, Greg. All right.
Sorry, I have one in the room.
Pleasant good morning, Lanzel Bloomfield, shareholder.
Good morning, Mr. Bloomfield.
Before I ask my question, I will just echo a concern. Mr. Chairman, I am very grateful for the presentation, but my first concern is the clientele to go into the facility at One Belmont. I've passed that area. It looks very well. It looks good. And I'm impressed. But seeing what is happening in the Jamaican economy, even though we are growing, do you have the kind of clientele that will be able to sustain and give you the return on a all-year basis?
I'll let the resident expert, Mr. David Cummings, answer that one.
Sure. First of all, thank you for your question. It's an excellent question. Before we embarked on that project, we did extensive market research. Because if you think about it, we launched that project in the middle of COVID, when much of the world thought that work from home was going to be the future. So our market research led us to design a building for specific clients who we know, with or without work from home, would require a certain amount of corporate office space. And those clients who we've designed it for are exactly whom have signed up for occupancy of this particular building here. So the investment manager in his report outlined that we have 80% of the building currently tenanted with 10+ year leases, and those are all AAA clients. Obviously, I can't and won't reveal who they are here now for confidentiality reasons, but I can assure you that we did extensive due diligence on that project. We did extensive due diligence on the market, and we did extensive due diligence on the clients who have signed up and agreed to be lessees within that building. And even up to the last week or two, we have an increasing waiting list of persons who are asking if they can get space within One Belmont. So I think to answer your question, we can assure you that the SYGNUS Real Estate Finance team has done the diligence. We have the occupancy, we have the quality tenants, we have the tenure of the leases, so we feel confident about One Belmont and its future.
Okay. Thank you on that, Mr. Chair. Page 48, note 11. Accounts payable accrued liabilities. Mr. Chair, in 2021, this line item stands at 189.3 million. Now in 2022, this has ballooned to 1.6 billion. What is being done to reduce and eliminate this amount?
So, good question. As you can appreciate, real estate is primarily about project finance, which means you commit to a transaction and then there are scheduled drawdowns. So, and you don't get a return until you complete an exit. So clearly, what we are doing is for the benefit of shareholders in terms of managing how we use the cash that we have to pay those payables down and liabilities. So if you think about the life cycle that we spoke about earlier, we are now in the harvesting phase when a lot of cash will be coming back. But during the last financial year, we didn't start harvesting yet. So the prudent thing to do is to pretty much try and time when you're reducing your payables and liabilities with when you're getting cash. Otherwise, you will have to over-leverage, borrow a whole pile of money, and then the interim financial statements would show much bigger loss. So what we are doing to reduce it is that as we exit projects, we pay down debt and liabilities.
Okay. Last question. Page 48, note 9. In 2021, you had no deferred tax liabilities. But in 2022, you are now carrying a liability of some 197.4 million. Am I correct in saying that this amount will have to be paid sometime in the future? And if so, at what point will you liquidate this line item?
So good question again. So it depends, right? Because the deferred tax is being generated from the activity that SRF is doing. So if we had a piece of land and it was just sitting there and then we chose to go and develop it and our intention is to, after we develop it, sell it, then clearly it's going to generate deferred tax just based on the accounting rules and the tax laws. And so that is what occasioned this tax liability that came forth at that time in the financial statement and not before, because we didn't have that activity before. So clearly, whenever such projects that occasion the incurrence of the deferred tax are completed and we have exited and sold them and get our cash, then it will be paid and extinguished.
Thanks very much.
Move to the questions online. Nicole, over to you.
Okay. The first question is from David Rose. What is the reason for the major delay in completing Ocean's Edge? Also, how far deviated are original capital collection timelines for SRF due to possible construction delays?
You want me?
Thanks for the question, David. The Ocean's Edge project is delayed essentially because there has been a change of contractor. So the original contractor has demobilized from the site, and we are currently finalizing the due diligence to procure a new contractor. That process is far advanced, and we expect to be able to make some release with respect to the timelines for that project in due course. But the substantive reason is that once you demobilize a contractor from a site, it takes some time to recast the project, to reprice the project, and to procure a new contractor to complete the previous contractor's work. So that's the reason for the major delay with respect to the Ocean's Edge project.
What was the second part of the question?
About the capital?
The second half of the... How far deviated are original capital collection timelines for SRF due to possible construction delays?
Capital collection timelines. I'm not sure what is meant by capital collection, but if you mean if what that question is asking is in terms of an average, what was our target for completing our first investment life cycle, and where are we now in terms of that investment life cycle and the difference in time? I would say maybe 6 months to a year difference on average, simply because during COVID, not only, well, although construction still proceeded for the most part during COVID, I think the biggest thing that occurred would have been delays with getting material from China to Jamaica. And even as late as last year, December, there were logistical and supply chain issues in terms of getting material. And for example, on Spanish Penwood, we ordered the frames for Spanish Penwood, and they arrived maybe 6 months or so after the scheduled timelines. Happily though, the supply chain issues have resolved themselves, and so we are looking forward to getting to the finish line with all our projects for the first investment life cycle, and then starting the second investment life cycle, because we still, 3/4 of the assets on the balance sheet are raw, undeveloped assets that we can unlock further value from.
He actually said capital collection was in reference to investment exits. So I hope.
Yeah. Right. So I think I answered it then.
All right.
Yeah.
Yes. Okay.
All right, I have another question here from David Rose. SRF got the first level of approval from Nepal for the Miami Bay property, which listed a resort as an intended development. Where are you with respect to approvals from the St. Anne Municipal Corporation and other regulatory bodies? And what's your timeline to execute this development? That's one part of the question. Will the party that bought the 15 acres also be involved in the development as a potential joint venture?
Thanks for the question as well, David. I'll speak to where we are in terms of the status of the other regulatory approvals. You will probably be aware that NEPA is just one of the many steps that we have to get approvals from. Parish Council will not grant us building approval until we also get approval from the Jamaica Fire Brigade, Ministry of Health, JPS, National Water Commission, and a number of other agencies. So the NEPA approval for any development is but one step in the process before Parish Council will do that. We have obviously made our application to the St. Anne Municipal Corporation, and that application is still being considered. But to the best of my knowledge, they are still awaiting responses from the remaining agencies, some of which I actually highlighted before. In respect of the entity to which we divested a part of the property, that we couldn't answer that, and as to their intentions and our intentions as well, we have not made a decision as yet. So I think it would be inappropriate for us to comment at this point in time exactly what our final intention will be, and clearly we could not make a comment on behalf of the entity to which we sold a part of the property.
All right, last question from David Rose. With SRF racking up management expenses to SYGNUS Capital, when the project outflow is realized, what percentage of this related party expense will be paid versus potential dividends to shareholders?
So, good question. Obviously, somebody has to manage the company, right? Somebody has to do the hard work. Somebody has to put on the hard hat, go down on the site, deal with challenges, problems, find resolution. If it wasn't SYGNUS Capital, it would have been someone else. So, treating it at arm's length, monies that are owed are monies owed, and just like any other company, the priority of payments is no different. You know, it doesn't matter who. If SRF owes related parties monies, it needs to pay those monies. I would say though that, and I guess at some future time, you know, David can ask this question again, because there are solutions to some of those, to part of the question that he asked in terms of the investment manager pretty much taking a stance of, what's the term I'm looking for? Of participating at the same level with shareholders. So I can't say more about that other than to say that I recognize the question that David is asking, and at some future time I can answer that in a better way. But what I'm really saying is that there is a solution that the investment manager has on the table that could have the investment manager participate at the same level with shareholders, so that cash, is free to do other things.
Okay, we'll end this segment of the question and answer and we'll hand it back over to the chairman. Thank you very much.
Okay. So, thanks again, and Mr. Chairman.
So I want to thank the shareholders and other participants who would have raised questions. I want to thank the investment managers for providing the answers, so capably. I do not want to prolong this section of the meeting, but I have to say that one of the things that stood out to me is the book value per share relative to the market value as the shares are being traded. I'm not advising you, but I would say take keen note and be advised. Okay? There is value that the market is currently not recognizing. So there being no further questions, I will now formally propose resolution number 1 for adoption. And the resolution reads that the audited accounts for the year ended August 31, 2022, and the reports of the directors and auditors circulated with the notice convening the annual general meeting be and are hereby adopted. For the shareholders attending virtually, I now ask you to submit your vote on this resolution via the e-platform. And for the shareholders in the room, I'm going to ask you to raise your hands so that our scrutineer can count your vote. You have 2 minutes to cast your vote. Voting is now opened.
Could you just keep your hands up, please? 1, 2, 3. Thank you. Chair, the resolution is carried.
Okay, the scrutineer is indicating the resolution has carried. I therefore declare that the resolution has carried. I will now proceed to resolution number 3, as resolution number 2 was already adopted. Resolution number 3 is that the amount in the audited accounts of the company for the year ended August 31, 2022, as remuneration to the directors for their services be and is hereby approved. For shareholders in the room, again, I'll ask you to raise your hands. For shareholders on the e-platform, we'll ask you to submit your votes. Voting is now opened and will remain open for 2 minutes.
Where your hands. The resolution is carried, sir.
Okay, I therefore declare that the resolution for the approval of the director's remuneration as indicated in the audited accounts for the year ended August 31, 2022 has carried. We'll move to resolution number 4, that KPMG Chartered Accountants, having agreed to continue in office as auditors, be and are hereby appointed auditors of the company and to hold office until the next annual general meeting at a remuneration to be agreed by the directors of the company. Again, for shareholders in the room, you may vote by a show of hands. For directors voting remotely, you can vote on the e-platform. Voting is now open and will remain open for 2 minutes.
You can lower your hands. The resolution is carried, Chair.
Therefore, declare that the resolution has carried, consistent with your votes. We'll move to resolution number 5. And this resolution is that pursuant to Article 185 of the amended and restated Articles of Association of the company, the shareholders agreed to accept notices or any document required to be sent by the company in electronic format. Once again, for members in the room, shareholders in the room, you may vote by a show of hands. For directors voting remotely, you may now submit your vote on the e-platform. Voting is now open and will remain open for 2 minutes.
Your hands. The resolution is carried, Chair.
I therefore declare that the resolution has carried. I want to thank shareholders for their participation and for their support of all those resolutions 1 to 5. I'll now invite Mr. Beresford Gray, CEO of SYGNUS Capital Limited, the investment manager of SRF, to deliver some comments and remarks to the meeting. Mr. Gray.
Shareholders, directors, ladies and gentlemen, good morning. Thanks again for everyone to participate, those in person, those in cyberspace, in the first annual general meeting for SRF, our specialty real estate investment company. My colleague Jason Morris would have gone through the financials, our strategy, and our incredible success stories over the last 3 years. So today, what I want to talk about and want to message and left with shareholders is SYGNUS Capital and the SYGNUS Group's commitment to driving shareholder value, driving value for our investors. That's our strategic theme of the last 24 months, and that will continue into the future. But to really understand what we mean in the context of SRF, we need to step back and start with our investment thesis. Has SRF proven to you as shareholders that our investment thesis is solid? And if you listen keenly to what Jason talked about, you should have a resounding answer, yes, to that. There are various evidence to that. Various evidence to the fact that the company that you have invested in has a solid and proven investment thesis over the last 3 years. I will just jog your memory to some of the points that Jason highlighted. The first one is shareholder equity. We have grown the shareholders' equity from just over $2 billion to $7.6 billion over 3 years. That's threefold growth in value. The profitability of the company, and I won't necessarily go through year by year, but cumulatively between 2019 and 2022, we generated just about 3 billion Jamaican dollars, or just a shade under $20 million US in profitability. How many companies on the Jamaica Stock Exchange can boast such achievement? Such achievements for a 3-year-old business with a new investment thesis at the time, unlocking value in real estate by taking debt or equity position. How many companies on the Jamaica Stock Exchange can boast such achievements when 2 years of our first investment cycle was marred by a 100-year-old event in the form of COVID? Not only COVID, but several logistic challenges in the global economy that affected us. We should not take these achievements for granted, but we should recognize as shareholders and investment managers that these are deliberate achievements only because we have a solid investment thesis and we are committed to driving shareholders' value. So, if we have a solid investment thesis, which we have proven when the tides are high and turbulent, then shareholders, you should be very confident and be compelled to continue investing in SRF and holding on to your investment in this company as an enhancement to your portfolio and a means through which you can continue to generate generational wealth. My second point is execution capabilities. I cannot stand here before you shareholders and talk about driving shareholder value, driving investor value without talking about execution capabilities. We are talking about real estate. We are talking about the capacity of the manager, the capacity of the team, our real estate team led by David Cummins and with significant support from Dr. Ike Johnson and of course all the other members of the team. Their capacity to deliver, conceptualize marquee investment projects. And I won't beat on One Belmont too much because we have talked about that a lot, but to deliver that project, which we are going to finish this year, David, again, with all the challenges over the last 2 years, speaks volume to SYGNUS real estate team, the capacity to execute projects on time, within budget, and within headwinds and challenges. What does that mean for you? What that means for you is that as we look at the investment horizons for real estate, whether it's greenfield, brownfield, whether it's in Jamaica or outside of Jamaica, rest assured that you have a team that is managing SRF that can execute world-class, best-in-class real estate investment opportunities across the whole spectrum, from industrial, residential, commercial, or resort development. And that's our capacity and execution capacity will help us to continue to drive value for you. The other important thing that is fundamental to the outlook and the aspiration of SRF, the type of foundation that should give you confidence that when you look at our book value today and you see that the book value of equity has grown 73% over the last 3 years, from I think Jason just about $13 to just around $23 at the end of 2022. That is just the tip of the iceberg in terms of growth in book value of equity. Why? Because we, as Jason pointed out, currently sits on key strategic investment assets. You know, land, location. These are the bedrock of real estate investing. The bedrock, the platform from which we can monetize several projects. We have probably the best piece of industrial property in Kingston today that Jason speak about, that we are going to monetize over the medium term. No real estate investment fund in Jamaica at the moment can boast 55 acres of industrial land. Why is that important? It's not only important because we have 55 acres of industrial land. No. It is important because globally, the big themes, and probably the biggest theme in terms of real estate investing today is logistic. And we saw that. Growth in trade, expansion of our port, growth in businesses, large business distributors want more logistic space. So we are sitting on a strategic asset that is well aligned with one of the biggest and most attractive theme in real estate investing. And that will drive value for our shareholders. Let's use another example of our strategic asset that we are very confident will deliver significant future value for our investors. Resort. We, again, has the Maumee Bay Resort property, one of the most beautiful resort property in all of Jamaica. The location is unmatched, definitely unmatched. But again, what are the big themes in resort investing today? Luxury. With Maumee Bay, we can pursue various options. We can capitalize again on the big themes in resort development. And without those type of strategic asset, then you can't capitalize on big themes in real estate investment. And what I'm saying today is that we have strategic holdings of real estate asset, land, to be exact, at great locations that are aligned with big themes in real estate investing. And we intend to monetize those to continue to drive shareholder value. And of course, it would not be a SYGNUS AGM. It would not be a SYGNUS real estate AGM. It would not be SYGNUS if, of course, I don't wrap up my conversation and my thought around driving investor value, driving shareholders value without talking about governance and risk management. It's not possible. SYGNUS is about strong governance, strong risk management. SYGNUS is about building best-in-class alternative investment companies for our investors, for our shareholders. And you achieve best-in-class, sustainable, long-term businesses and investment company that can drive shareholder value if you have strong governance and risk management. And at SYGNUS, we have strengthened and continue to strengthen that all the time. We have add resources to our risk management capability. We already had a very strong and robust risk management process, but we have added capabilities to that because as we grow as a business, the demands for risk management right across the spectrum, real estate, project finance risk, operational risk, increases. And we as a business have to make sure that we're aligned to improve our controls, improve our risk management capabilities, and of course, drive accountability within our business. And we have done that. And we are well positioned to deal with all of the headwinds that are in the world today. Today, we speak about a situation where we have high interest rate environment. That, of course, have implication for our business, as implication for real estate investing. We talk about geopolitical issues. All of those issues have implication. And as a fund manager, we are very aware of those and have positioned ourselves very well to mitigate the risk that comes with that. Why is that important? It comes back to my first point. At SYGNUS, we always think about driving the upside, driving value, but also protecting the downside. It made no sense. We triple shareholder value threefold over 3 years. And then because we are not strong on the risk management side, we lose it. Then we are not delivering for you. We are just talking. So I want to just wrap up my conversation by saying that at SYGNUS, we are focused on driving shareholder value, and we continue to embed that thinking in all our strategic actions, from our investment thesis, a proven investment thesis, execution capabilities, owning and investing in strategic asset, and of course, anchoring all of that in governance and a strong risk management culture. So shareholders, I just want to say thanks again for all your confidence in our firm, and in your firm, that is. Thanks again for giving the support to SYGNUS Capital for managing the asset of SRF, and rest assured that we will continue to drive value in the business. Thank you very much, ladies and gentlemen.
Thank you very much, Mr. Gray, as we often call him, Barris. Thank you, Barris. I'd open the floor to the second question and answer segment. And of course, we'll just invite Mr. Gregory Samuels to moderate this section once again.
Thank you, Mr. Chairman. What a beautiful speech by our CEO, Barris Gray. Can you give him a round of applause again? And I'd like to say two things before I open the floor. There's two questions online. One, there's a number I want you all to remember, 360%. That is the increase in shareholders' value, August 2019 to now, 2.1 billion to 7.6 billion. That's the value we have created. The second thing I want to say to you is, based on my finance studies, there is a point where investors need to act, and our chairman mentioned it. It's the difference between market value per share and book value per share. That's a big signal. So please take note and act accordingly. Now, to the question online.
All right, the first question is from Judith Evans. Some companies are doing share buybacks because they say it increases shareholder value. Is SRF JMD of this mind, or do you intend to deploy surplus cash to property projects and further development of the company?
Interesting question, right? Because we have been having some discussions internally. Obviously, at this moment, we can make a lot of money from deploying capital into the assets that we have on our balance sheet. That, that's a no-brainer. But what I would say, right, is that one of the options that could unfold is, if markets get more friendlier, we may very well decide at some point to take some kind of action, because it's not that we have any more information than what we put in the audited financial statements. Well, maybe I do, but really and truly, it's mind-boggling. The book value isn't, it isn't financial assets that are held in space. It's actual property that you can go and look at and touch and feel and taste some of the dirt if you want, or buildings that you can go and touch. So clearly, when financial markets settle down a little bit, if this disparity exists, then clearly it would behoove SRF to take action. And I leave it at that for now.
More questions coming?
Yeah, I have two more. So this is from David Rose. What's the rental income being earned on the former French embassy in the interim? Also, following the completion of One Belmont and the departure of that tenant at the French property, what's the value path you see going forward?
So I don't recall exactly what the rental income for One Belmont is, but I can get it and give it to you. I don't have it in my head, but what I would say is not, it's not substantial. And in terms of the value path for, I assume, Hillcrest, once the tenant leaves, as I said in the presentation, when we have something to announce, we'll announce it. I'm being frank here, right? Because to be honest, our strategy is really not to go and pre-announce stuff. and then, because you pre-announce and if your plans have to change, you have a long explanation explaining why you have to change. We prefer to, it's signed and sealed and delivered, and then we come and tell you. Just like what we did with One Belmont, right? We don't want to go and pre-announce. When we figured out what we want to do and everything is copacetic, as we like to say, then we'll give you all the information. But at this point in time, we are still going through the planning phases. It's not easy work. It's a lot of work. If it was easy, everybody and their grandmother would be doing it, right? So we are going through the process. We have looked at various things that we want to do, and we haven't made a decision as yet. And we don't need to be in a rush. Them now make no more land in Jamaica in a Kingston 6. So we just go and sit on it and figure out what we need to do. And once we have figured out what to do, how to optimize it and generate the best return, then we'll announce.
And just to follow up on Jason's response and David's question, we also have to remember that SRF is a listed entity and we have to be guided by the JC rules. So usually once we have a material announcement or anything that will impact our shareholders, we always use a JC. So we can always keep your eyes there. Once we have something material, we'll actually announce it there. So just, David, and I know you know this, so we will keep you posted there. All right, thank you.
All right, last question from David Rose. What opportunities does SRF see in the coming months for potential deployment of capital back into real estate investment notes?
So, go ahead, David.
Thanks for the question, David. Very good question. And clearly, we are constantly scanning the market for opportunities across all segments, residential, commercial, hospitality. The current real estate investment notes we have now are all centered around the residential space. And as you will be aware, the residential space itself is further segmented into luxury and other categories. I believe that we have to be careful in how we select the particular subsegment that we invest in, because the dynamics of the market are constantly changing. There's interest rate considerations, there's buyer behavior, and we have to continually liaise with realtors to understand where the demand is. Because one of the things about real estate investing, because of the long gestation period and the life cycle involved in the process, you can't make a decision to build something today because it's something you see in the market today. There's a lag of 18 months, 2 years before you bring your product to the market. So if you see a trend today and you try and build something for that trend, you may be too late. So you need to anticipate what is the market going to look like in 2 years' time when your product is finished. And that's what you need to target. So to narrow it down to answer your specific point, we are constantly looking for opportunities in the real estate investment note space, but we have to be very careful in that we are doing products that the market will be accepting in about 2.5 years from today, because that is essentially what we have to plan for.
Okay. Is there any questions in the audience? Yeah, one question. Okay.
Hello, everyone. Bertram here. Commendation is due to the team. The share, what I was seeing on the with shares wasn't very encouraging, so I took the trip into Kingston, and I'm hearing better news. I'm feeling better. I had a question. So, what are the typical legal risks surrounded this type of business, and has that changed with the pandemic? Just help me understand, what are the legal risks?
Who wants to take that?
So you mean real estate or the business?
Right, real estate.
Real estate.
Specialty real estate.
Okay, you want me to take that?
No, you can start.
Yeah, there are various legal risks surrounding real estate, right? And it all depend on the type of position that you take, meaning the legal risk surrounding, for example, a project investment which is debt is very much different than when it's equity. You know, the legal risk when you're a debt investor, like when we do REINs, you know, we are normally seen a lender, and of course, a lot of the liabilities associated with the project is with the developer. You know, and those are related primarily to contracts, sales contracts, you know, contracts with contractor, you know, where you can have breach of contracts between the developer and contractor or other third parties, suppliers, etc. And of course, you know, if you, and you've probably seen it, if you as a developer don't get all your regulatory ducks together, then you have legal risk associated with the regulators, right? And those can have significant consequence. So as a developer, you face all of those directly. As a debt investor, it is, you don't face those directly. You probably have more legal risk associated with conflict that might arise between you and the developer. So when we take the position as developers, as that is, we are deploying equity in a project that we own and are developing, then we will be assessing all of those legal risks, everything from, you know, legal ownership of the land or property to all the contractual unregulatory risk that can have legal consequences. And, you know, we have our head of legal and compliance, you know, Ms. Serlin Hudson there, who play a critical role in that due diligence process, along with our external counsels to try and mitigate those risks. Yeah. Yes.
Just to add to what David is saying, what Barry's just said, and he pointed it out clearly where he said there's one risk when we're taking proprietary investments versus when we're investing in real estate notes. From a proprietary perspective, we have to make sure that all the necessary regulatory approvals are in. And we talk about the municipal approval. We have David, who is our head of real estate, and he knows from the end-to-end product. So that's always his responsibility. And we can almost assure you that we never start a project unless we have the relevant approvals, which is why Jace would say to you, we can't say much about 56 nor Charlemagne, which is Hillcrest, because the necessary approvals are not there, and we try not to speak out of turn because we don't want to influence the regulator. So for proprietary projects, which is the ones that SYGNUS is putting equity and sometimes debt in, we always make sure we have the regulatory approvals before we make any announcements. Then we look at real estate notes now, which is where we're normally putting debt in a project. So that's what you see a developer, and they would come to us and say, okay, we have this project, we're building 15 apartments, and we want you to finance it. SYGNUS is operating as a financier there. So our risk is largely a financial risk and interest rate risk to some extent. We try to ensure that the developers keep the risk in terms of those third-party contracts that Barry talks about. So that is usually on the developer's side. So we usually ensure, and David again and his team ensure that the necessary checks are in place to ensure that the regulatory approvals are in place. If it's supposed to be strata, that the strata approvals are received. And if it's supposed to be subdivided, then we have the relevant, if not yet subdivided, that the relevant application has been made to the relevant authorities. So that's just some of the steps. And you'd have heard Barry's mention the governance structure that we have in place. That's very, very critical. So no credit, no investing is done unless the internal team has evaluated it. We had the greatest legends in the industry. Mr. Rousseau was one of them. He has over 60 years of experience. I mean, we'll certainly miss him, but all our projects are assessed, scrutinized by that team. Then it is actually sent to a board-approved a board-approved committee for investment, and it's only if those two segments approve those investments that we choose to go ahead. So you're in safe hands, and I'm happy you took the trip here today. I'm sure we'll be hearing much more from you. All right? Thank you.
Okay, if there's no more questions, I'd like to thank you all for your questions, and back to Mr. Chairman Horace. Thank you again.
Absolutely. I'd like to endorse the comment by Gregory. We're very happy to have your participation, and we welcome your questions for sure. So, and also I just want to thank the investment managers for providing, adequate and sufficient responses to those questions. Great. I will absolutely assume that there are no further questions. At this point, I'll invite Director David Cummings to join me at the podium, and he will move a vote of thanks.
Chairman, shareholders, directors, members of the media, ladies and gentlemen, good morning. Good morning. I stand corrected. It seems that it was only a few months ago that we were here with you launching the SYGNUS Real Estate Finance initial public offering. But yet here we are today in May 2023, concluding the very first year of operations as a publicly listed entity. That established, it is my distinct pleasure to move the vote of thanks on behalf of SRF and indeed the entire SYGNUS group. Firstly, thank you to everyone who took the time to be with us this morning, whether in person or virtually. This is your company, and we wish to reiterate that we have and will never take you for granted as we strive to maintain and continue to grow your faith in SRF to deliver strong operational results and preserve your shareholder value. The bottom line is that SYGNUS Real Estate Finance is making significant strides in the continuous creation of value for our investors, shareholders, and partners. We are strong on innovation, conceptualization, development management, forming partnerships, and ultimately, as Barris indicated, execution. Thank you as well to the myriad of professionals in the entire real estate industry and construction industry who support this execution, including architects, real estate agents, engineers, quantity surveyors, land surveyors, attorneys, contractors, suppliers, and project managers, to name a few. Thank you as well to you, our valued shareholders, for considering and passing the 5 resolutions placed before you today. To the Chairman, Mr. Horace Pesado, and Board of Directors of SYGNUS Real Estate Finance, and to the President and CEO of the SYGNUS Group, Barris Gray, we say thank you for your continued robust leadership in guiding the company to achieve these results. We also express our gratitude to the innovative and industrious teams within the SYGNUS Group who also contribute to these results, including the real estate team, the private equity and mergers and acquisitions team, the investment banking and investment management teams, supported, of course, by the entire cast of business units within SYGNUS, who all helped to deliver this performance. Thank you all. I must also highlight the work of our team of real estate consultants who form a committee known as the Real Estate Investment Advisory Committee. There are 2 external members of that committee, namely Jeremy Brown and the late Peter Rousseau, to whom we all owe a substantial amount of gratitude for the important consulting role that they play. We all wish that Peter were here with us today. In lieu, we respectfully ask that you all keep the entire Russo family in your prayers during this difficult time. Peter, may your soul rest in eternal peace. Let me also say thank you to our Investment and Risk Management Committee, our trusted investment gatekeeper, for their thoroughness and astuteness in reviewing and approving our recommendations. You can see how this is manifested through the presentation we all heard a short while ago from Jason, the investment manager. As you're aware, it takes a collaborative effort to successfully stage events of this nature. And so we now recognize those who directly or indirectly were involved in bringing this to reality. We extend our thanks to our General Counsel and Head of Legal and Compliance, Sarah Hudson and Andrew Foreman, and the remainder of the team, who spent many hours in planning and organizing this very first AGM for SRF. Thank you also to the SYGNUS marketing team, led by Elizabeth and Renee, who invested so much thoughtfulness and energy into assembling and leading this production. Let me also single out a few members of that magnificent team of practitioners. The production team includes Phase 3 for the audio and video, the Affinity team for establishing the online streaming platform and also for facilitating voting, Agile, or IT partner, Reasons and Seasons for their outstanding decor, Naomi Garrick and her communications team, Garrick Communications for the public relations, Jose, our videographer, for the media footage, which I'm sure he'll be sharing on multiple platforms, and also to Leo Hudson for the photography that we all look forward to seeing later on social media. The production team also includes Simply Dandy, who produced the annual report written by Jason and the investment management team. I trust you will all agree with me that this report is intuitive and makes for easy reading. Finally, let me thank our auditors, KPMG, for the audited financials, and of course, Digicel for enabling Wi-Fi to support this annual general meeting. Finally, we'd like to express our appreciation to the management and staff of the Jamaica Pegasus Hotel for their impeccable hosting and support. To all of the other unsung heroes behind the scenes who I may not have named, we acknowledge and thank you. Once again, thank you all for attending this very first annual general meeting of SYGNUS Real Estate Finance, and we look forward to seeing you all next year. May God bless you all, and please continue to stay safe in 2023. Thank you.
Thank you, David. Very, very well said, comprehensive, and absolutely complete. One thing is for sure is that when you talk about SYGNUS, I'd have to say that one of the words that comes to my mind is execution. This is not a team that is afraid of taking on challenges and executing on those, and not just execution for the sake of doing it, but as Barrett indicated earlier, is taking the necessary risk management precautions to ensure that when we make gains, we can keep those gains and return those gains to our shareholders. So at this point in time, there's not much left for me to do but to wish you a very wonderful day. You know, all good and great wonderful things come to an end, and this annual general meeting, as I wind down to closing, I really feel like I want to stay around a little longer and, you know, listen to some more of what's happening with the company. But we'll continue to do that on a quarterly basis. We'll continue to keep you informed, shareholders. One of the things we want to just remind you of is that For members who do not have an email address on record, or a bank account on record with the company, we're asking you to provide that information to us. That's to ensure that, one, we can notify you on a timely basis, and two, when we are paying dividends, we can ensure that you get the dividends. We don't want to have the dividends sitting in our bank accounts waiting to be paid. We want you to have your dividends so you can make good use of it when that time comes. So please, go onto the JSE website, contact your registrar, your agent, and ensure that your bank account details are adequately updated. So, ladies and gentlemen, thank you so much. I now declare this meeting terminated. We look forward to having you at our 2023 Annual General Meeting. It has been a pleasure for me, and I hope it was one for you also.